Speaking of all of this, the Fed is out with the beige book, which is the regional look at the economy. As that meeting looms, Rick Santelli joins us now with more detail. Rick.
Yes, that's the roadmap to the January 27th to 28th meeting. However, I would caution, if you look at the probabilities in the Fed Fund futures contract, yesterday they were 3%. Today they're 5%. Why they went up on hot PPI is anybody's guess. So we're looking at virtually no chance of a rate cut for the January meeting. Having said that, the phrase that was most prevalent in today's beige book was, well, it was slight to modest. Whether you're talking about growth, up slight to modest. Talking about prices, up slight to modest. Talking about wages, up modestly. So things are improving, actually, based on the last several beige books, but not in a huge way. As a matter of fact, it just reinforces the notion that some have about a K economy, because what was brought up is that the more well-to-do are spending pretty good on luxury items and travel, whereas the bottom of the ladder is spending more on things that cost less because they're very, very much price sensitive. So I think that's a fairly good summary. But what you're not going to see is any significant reaction in the market. Look at the 2-day of twos. What you should notice is it's not really below yesterday's low yields, but it's been hovering right around 351 for about 20 minutes. So the beige book made little difference. Go down the curve to 10 years. They were hovering at 413. Pretty much that's exactly where they are now. However, look at how much below yesterday's lows they are. And once again, think back. We had PPI today. The year-over-year numbers were hot, and then we received last month's that I didn't have this morning. And when we ended up getting October numbers and looked at it, it made a little more sense because, at least according to PPI, we have seen some appreciation in prices that didn't necessarily show up in CPI, but the market largely has ignored it. And finally, the dollar index. Now, this is interesting. The dollar index over the last 25, 30 minutes has come back to virtually unchanged. Now, whether that was a lead-in, a little nervousness in the beige book, I can't say. It experienced the same dynamic as stocks. And if you look at the Dow Jones Industrial Average, it was down about 230, about 10 minutes for the beige book at 2 Eastern, and then it was around minus 166 when it hit the wires. Now it's minus 152. So I don't know that it was beige book that moved the dollar up or beige book that moved the Dow up. But whatever that dynamic is, it continues. Most likely, we are reversing a little bit of overselling in the stocks. And when it comes to the dollar index, so many, when the issues of the day, whether it's Venezuela, whether it's tariffs, all the issues of the day that are supposedly bad for the dollar, well, it really hasn't come to pass. So we are seeing some short covering in the dollar index.